Welcome to the Fuller Tracy Money Audio Commentary. This is Owen Tracy recording. It is 3:26 p.m. That is Central Time, and today is February 10th. We had quite a move in the Treasury markets today, and that is quite a bit more volatile than the very inert period of trading that we had for most of the last maybe month or so. Initially, the yield had popped above 4.2%, and today it dropped straight back down through it. And you also can't really see it on the weekly chart. You have to zoom in a little. But what we now have is that the yield is below the 200-day moving average. It's below the 50-day moving average as well. So I think that's rather important because what we really were treated to was a very inert period of trading all the way from the middle of December through until the middle of January, and then the yield popped on the upside, and that really created the threat that there would be more of a sell-off. But now we've had retail sales come in that were quite disappointing for the fourth quarter. And it's also coming on the back of a succession of other sort of minor pieces of economic data. So on the one hand, you had yesterday, I showed the chart in the video of a subprime auto loan default rates or delinquency rates that are just trending higher. And it's a subset of the broader auto sector. And on average, the default rate is probably more around 1.5%, and for prime it's 1%. But of course, for the subprime, it's more like 8 or 9%. Then what we have also seen is that consumer delinquencies are rising. I thought this was a good chart. So it's showing us that it's US loans. So that's all kinds of loans. That's mortgage loans, that's personal loans, home equity loans, that would be auto loans, credit card loans. It's every kind of loan. And those are, there's a rather large number are in seriously derogatory delinquency. But there's no question that that's trending higher. And I think it's something, an issue that we've also seen is that when these things start to go up, they go up quickly. And we also have that exact same phenomena in unemployment data. So I think that's an important thing to bear in mind. What we also saw in here today was that the stock market was pretty quiet on the back of this jump in bonds. The dollar was a little bit firmer. The yen was particularly firm. Gold and silver were down a little, but certainly not in a dynamic manner. Oil prices are still reasonably steady. But then we saw the beginning of a rebound in the software sector. And there's certainly some differentiation going on within that sector. And I've done a fairly extensive examination of that sector today to highlight those that are showing clear relative strength.